The S&P 500 closed at 5770 on Friday. We've got our daily candlestick charts pulled up. We've got our gamma exposure data here highlighted by the purple bars. We've got our 200-day EMA, which is the red line, and we also have our Keltner channel bands, which are the purple lines here. We've seen a pretty steep decline over the last couple of weeks, now coming to a very interesting point in the market. From a price standpoint, the 5,700 level was previous support. This is going all the way back to the end of 2024. We're right here in that zone again. We're in our lower dealer cluster zone, highlighted by this green box. This is showing us where the bulk of the gamma exposure concentration is on our chart. We also saw significant volume in the options market around this 5,700 strike as well in Friday's trading session. And let's zoom in here just a little bit onto the chart. And the candlestick from Friday saw a fairly large wick at the end of the day, closing near the highs actually. And so a pretty big bounce in the market overall, basically showing that a lot of buyers stepped up below the 5,700 level. And we saw that accompanied in the options market, as I already mentioned, by pretty sizable volume at the 5,700 strike all the way up through the 5,800 strike. So the 200 EMA is sitting at 5709. This is also providing some technical support as well as a bounce off of that lower Keltner channel. So multiple things coming into play here on Friday's trading session. I think it was a really interesting day from a price standpoint, and we're going to be watching this gamma exposure data come Monday morning to see if we can get some confirmation, a little bit more upside. I'd like to see the gamma exposure growing at 5850 and 5900 next week, and basically serve as a confirmation if price continues higher during Monday and Tuesday's trading session. That's what we're going to be looking for in our community Discord, which, by the way, I'll put a link down below. You can check that out for free. Over the last week, it's been really interesting from a strategy standpoint. We have actually been using this dip in particular over the last 5 trading sessions to initiate new long positions in the March 21st and in the April options expirations. So even though the market has continued lower over the last 5 or 6 trading sessions, we've been entering long positions, and we've actually been closing out our hedges. As you know, we've mentioned for the last couple of weeks, we had the 600 585 put debit spread on the SPY. We closed out that hedge, locked in those gains, and have been adding additional long positions in the case that the market has a bounce. We didn't get that bounce last week as we saw a series of lower highs and lower lows. However, as I just mentioned, this area around the 5,700 strike looks like a high probability setup for a potential bounce in the next week or two. And so from a strategy standpoint, I think that's an effective approach, continuing to add new long positions, adding new hedges as well. I mean, this doesn't guarantee that the market's going to go up. If we see gamma exposure growing at these lower strikes, the possibility for another flush down, even down to the 5,500 level, is a real possibility. We do see large negative gamma exposure at both 5,500 and 5,600. So even though we are initiating new long positions, and this is, of course, these are option strategies, so we're initiating new option strategies that have high reward, low risk type of profiles, and at the same time locking in gains on our hedges, and we'll be adding new hedges at these lower strikes down here in the case the market does sell off. And that's been a really effective strategy so far, and that's what we're going to continue focusing on into this coming week. And if you guys are interested in learning how we use gamma exposure as well as portfolio strategy, you can head on over to geeksoffinance.com. We are running a special discount, which you can check out as well. Taking a look at the VIX, the volatility index closing at 2337. The VIX has really been in a steady uptrend over the course of this sell-off. No major spikes, just steadily trending higher, now reaching the 25 strike, the largest gamma exposure concentration as of Friday. Interestingly, however, most of the volume in Friday's trading session was at the 20 strike, much lower than where we were trading. And scrolling up the options chain, we saw additional volume coming in at the 30 strike and the 40 strike. And we have a large gamma exposure concentration at 4250. So this is obviously investors hedging their portfolios. There's still a lot of open interest at some of these higher strikes in the VIX, and this is basically insurance protection. If we do see another leg lower and a crash down to the 5,500 level like we mentioned earlier on the S&P 500, these VIX calls could be a crucial part of an investor's portfolio. So we do see increased activity at these higher strikes. We have not seen that in a long time at these higher strikes on the VIX. And so that's interesting to see all this volume continue to come in. But ultimately, from a big picture standpoint, the fact that we have the largest GEX at the 25 strike and the largest volume between 17 and 20 tells me that overall, as far as the options chain goes, the likelihood is for the VIX to come down just a little bit in the coming week or two. Turning to the crypto markets, Bitcoin trading below 85,000. It's had a rough time over the weekend, going from above 90,000 on the end of the day on Friday to now below 85,000 as of this recording, which is early on Sunday. So a rough couple of days for Bitcoin. We're still hanging out around this zero gamma exposure level, which is at the 85,000 strike. So you can see how many times it's been bouncing over the last few days. Volatility certainly seems to be coming back to the crypto markets, not as smooth as it was during 2024. The largest gamma exposure concentration, however, is still at the 100,000 strike. And so we continue hanging around this level despite the increase in volatility. So the potential over the next month or two for a move back up into this 100,000 strike is still there. The sell-off over the weekend is a little concerning, and so we really need to watch and see how the market opens up on Monday in the equity markets. We'll take a look at the data from a gamma exposure perspective, and we'll have a better sense of how to properly position into next week. Next, let's take a look at a few individual names. We'll start with Nvidia. Closing at 112.69 on Friday, Nvidia had a pretty decent day, up 1.92%. However, look at this 50 EMA. It's at 113.88, and over the last couple of weeks, Nvidia has been solidly underneath this EMA line. Bouncing off of our lower dealer cluster zone, we've seen this move down over the last week as well as the options market has shifted lower. However, we are still seeing gamma exposure at 140 and 150. So the first things we're looking for is a breach of this 50 EMA line, so we need to get above this 113.88 level. And then we've also got our zero gamma exposure level. This would be number 2. We need to get above that level, currently sitting around 123. So we need to get above the zero gamma exposure level as well. So this is going to be a multi-stage process for Nvidia to see some sort of recovery. But with all the volume coming in the options market at this 110 strike, along with a large gamma exposure, this could offer a bounce. This is why we identify these dealer cluster zones, is because this oftentimes is an area where market participants will be closing out their puts. So we saw a ton of volume at the 110 strike, and that has a cascading effect where option dealers are then closing out their shorts in the underlying security. So we've got a potential trigger here at this 110 strike. We've got technical resistance that has not been breached yet, but that would be our first clue. And then secondly, we have the zero gamma exposure level. That would bring us back into a positive gamma environment. We could see some volatility compression and shares potentially rise above this 120 to 125 zone. So that's the setup we're looking at for Nvidia. Next, let's take a look at Apple. This is a name we've been watching closely over the last week, in particular the positive gamma exposure at the 250 to 260 strikes. We saw 2 bounces off of this 230 level, and now we're trading above the 50 EMA and right around the zero gamma exposure level. So this looks to me like an inflection point in Apple. It basically double bottomed off of this 230 strike, and we've never saw the gamma exposure shift lower. And so these are the kind of setups that we look for. We see dips in the market like we've seen over the last couple of weeks in Apple, but we still are seeing large positive gamma exposure to the upside. And so the 250 level is our first target. We're looking for a hit before the March 21st expiration, and we're going to be applying option strategies in our portfolio to take advantage of a move into those levels. Next, let's take a look at Palantir. Palantir closing just below 85. Palantir getting cut by over a third from the 120 level down to the 80 level in just the last couple of weeks. A really wicked sell-off over those 2 weeks. We do appear to be having some support at the 80 level. This was previous support at the end of January before that big earnings release where we saw saw the huge gap up. So we basically closed that gap, and now investors actually have an interesting decision point to make at this 80 strike. We do continue to see large positive gamma exposure at the 100 strike. So a potential strategy would be adding an asymmetric risk reward approach, something like an out of the money call debit spread, potentially at the 90 or the 95 strike, and selling these 100 or 105 calls. So you'd be buying the 95 calls, for example, selling the 100 or the 105 calls. That's going to be a play that we're looking to potentially add to our portfolio. It's a speculative play, but it's a lower risk, high reward type of strategy. And so the benefit of that kind of strategy is allowing your portfolio to capture the upside if there is a significant bounce off of this 80 level. We're seeing large GEX at the 80 strike and the 100 strike. I've got the 50 EMA here at 84.23. So we closed above the 50 EMA here on a 30-minute chart. And you can see how many times we tagged this 50 EMA line over the last several trading sessions. So the setup, both from a technical standpoint and from a gamma exposure standpoint, looks really interesting. Doesn't guarantee that Palantir is going to bounce here, but this is the kind of setup we would look for to take a lower risk, high reward type of play, as I mentioned. So we'll be looking at adding a play like this in our portfolio this week. And if you're interested in accessing our gamma exposure dashboard and our option flow analytics tools, head on over to geeksoffinance.com. You can sign up and become a member. We are running a special promotion, $300 off our yearly portfolio manager tier subscription. Use code SPRING2025 at checkout. We have limited spots available, so take advantage of this discount while you can. Link in the description below. Members also get access to our premium channels in Discord. You can follow along and see all the moves we're making in our portfolio, as well as different trade ideas that we're looking at throughout the week. So you definitely don't want to miss that. Link in the description below. Thanks so much, everybody, for watching, and we'll see you guys in the next video.